And we are back in Baltic Capital Markets Conference coffee break session. I would say rather this is a lunch break session. My name is Chris Peterson, and today I will also talk with two distinguished panelists here with Vera and Maire. Hello.
Hi.
Hello.
So, first, I would probably ask you about your takeaways from today's panel. So, summing up all this, what you heard, your thoughts. We'll start with you.
Yeah, so basically from the perspective of what is to come, there's a lot of homework that we need to do, regulatory measure, pension reform, financial literacy, the readiness of the countries to work together to overcome different differences, yeah, and in order to get into a better functioning equity capital markets. So we are still gradually getting there. It's going to take some time, but I think with this conference is also bringing awareness to most people that there are people who, like me and Maire, we are actually contributing to these baby steps.
Yes, Maire, your thoughts.
I think I had the same word that Vera has, homework. That I think we saw it also with the big state-owned companies IPOs in Tallinn, that we have to do the homework. We have to have the institutions putting money in. Retail was very good there, and then foreign and international financial institutions will come. And I think when we had the pre-discussions with Egle from East Capital, she said as well that we don't just want one IPO. We are still worried about the liquidity. So we have to have multiple of IPOs to get really the capital markets liquidity up. And then the international investors will come more here. But we need to have local institutions who will really say, also validate the market for the foreign investors, that this is a good place to invest and these are the great companies.
It's no secret that we are a very fragmented market if it comes to Europe, and we are of course dreaming of this common European capital markets one day. In that case, should we be surprised that we are talking about the IPO droughts, for example, at this point, because we don't have this common capital market?
Well, the numbers that I presented before speak for itself. Yeah, so we are actually volume-wise, it's very low. It's you can say, is it because that we are fragmented? Actually, a lot of things happen is more on the bigger picture. The fact that the interest rate in 2020-21 was super low, so that was a lot of the company that wanted to go to the market went during that time. So of course, then there is much less now. On the other side, at that time we didn't see the drought. Definitely, I think the drought is more driven generally by the economic development of individual countries. The fragmentation itself is only feasible when we are already going into the details. Should I list here or should I list there, or should I do both of them, like the dual listing? I think we could overcome the fragmentation together, as what Nasdaq Baltic or the Nasdaq Nordic has done. But this is not the reason of the drought, in my opinion.
But still, it's a capital flow. It's a larger scale. Investors from Portugal can look at the Baltic markets and they suddenly see it somehow, and the capital is flowing. Isn't that the case?
I think, yeah, the infrastructure and the CSDs are fragmented in Europe. I understand that they are more and more working of getting it flow easily. It has been in history that it has been challenging to get kind of the physical, almost like shares moved across Baltics to Germany or anywhere. but I understand it's getting better. The CSDs are really working on it. And for example, Germany was a bad example because if you list in Baltics main list, you can so easily have a secondary in Frankfurt. It flows so seamlessly. But yeah, I've heard, and it's good to hear that they are seriously working on it.
The progress is there.
Yeah.
Okay. I have a second hypothesis as well. It's from me. So just because we don't have also, let's call it, if we compare to United States, a decent technology industry in Europe that can compete globally, is there a reason why we don't see also many IPOs? Because, of course, now currently tech industry is very active on market.
So for the tech companies, what we have seen is that when they are starting to have a very, very good proof of concept, a lot of funding is still done privately, so either by the private equity and the private debt, and then the source where these investors are also drive where the IPO is taking place. A company that is mainly financed by, as a European private equity, then most likely the IPO can take place here. But if it is financed mostly by US, they also learn how it is, the capital market working in their home country. It's a given that the risk-taking appetite of the Americans are just much higher than here. And we were consistently told the market is deeper there, so the valuation is therefore higher. And when you are presenting a future-oriented growth and so on that is far distant future, it's a lot more likely that they actually understand it or accept it than here. It's the moment it's like that. It takes time to adjust it, but unfortunately it is like that. Nevertheless, US is not for everyone. You cannot be a small fish in a big pond. Yeah, so there is a certain deal size minimum market cap so that you are feasible. If you are a small tech company in Europe, the best is to be listed in Europe.
Yeah, I think like the home market validation is so essential that where your roots are, where you come from, like the support you get from this really home investors that every time we do roadshows, every time internationals ask what do they think back home. Like if you can't answer it with really sincere that there's very good support for it, then they move on to the next. So it's essential that the home market can reach and it's best reached, especially for retail, if it's listed in your home market as well.
But then again, I have heard in different conferences the same Vinted or Bolt or Printful, now Fuel, that European markets now currently are probably too small for them. They are looking to New York.
You mean for listing?
Yeah.
Well, I mean, we have to work on that. Yeah. So I wish Adam is here to explain from his side as a Nasdaq Stockholm head. Yeah. Bolt is a very European brand. Yeah. Everybody use Bolt. Yeah. Even
also Asian markets as well.
Yes.
Very rapidly.
And to be listed in the US, you normally have to have a presence there. Where is the awareness of this particular company there? So it is indeed, if it is from the investor pool point of view or the one who's financing, it gets more and more towards that direction. But at least we should really give our best to convince the sellers that there is investor demand also in Europe for such company, because this is their home market or their ex-home market when they were smaller size.
Yeah, I think it's exactly like what Adam showed with this, was it Verisure or this big IPO that they had, that a lot of investors were like pure almost Swedish originated, and you can go wild and think that you're so great company that you will anyways make it in US, but then again like in challenging times, you know that you would have the local investors backing you up. You will definitely have a good IPO, good aftermarket trading. That's what you want to take, because IPOs are always a risk. And at the time of, you know, going out and book building, it's always like the day before, it's always so nerve-wracking how it will go. So at that moment, you will be thinking back that, okay, I don't know yet, but when you're closer to home, you know it will go well.
Exactly, yes, that's one point. 2 weeks ago, I was in Brussels visiting a European Business Summit, and I left there with a, let's say, sour feeling, because on the stage there were many discussions. I wouldn't call it panic, but lots of worries about not IPOs, but even losing companies such as ASML, Zeiss, Wurth, these big European-rooted companies that are really in front of the global competition. I'd say they are very vulnerable, and and there are real fear of losing these big giants. So what should, maybe not in terms of IPO, but I mean in terms of European competitiveness, we should do to really face these global challenges? It's a big question, I know.
Yes. I think I've seen this, wasn't it AstraZeneca who changed the prime listing? So there is really even the current shareholders of these huge companies asking why remain listed when you are undervalued. Yeah, it is indeed it's for certain sectors, the like healthcare. Healthcare is definitely a US forte, yeah, or technology. It kind of makes sense to go where your value is being more appreciated. Nobody can blame them, to be honest. And actually, in some, it's proven positively, some not. Yeah, it's all depend on each individual company, and also depend on the size. So it is not like let's go to US and you will be highly valued or better valued than here. I do not think so. It really depends on where you are and who you are, rather than is a generalization. Yeah. But one thing is for sure, is a unified market there. Risk taker, a lot more investment in the shares. I already showed it that they are not so much cash-based savings, but there's more investment in the shares. So nobody can doubt this, but it's not applicable for every companies.
Maire, your thoughts?
I think Vera knows about this more, but I agree on the case by case that if something happens, it tends to drive the market, that other companies are also thinking that, okay, maybe that's a good plan. But every company should think that is it correct plan for them. But definitely if something happens, it kind of something more like a new trend happens, then all the investor relations will look at their shares, that if they're not doing well, maybe US will help, and maybe it will at some specific cases. But I think the US kind of element, and really what you want to have there on the market for the business, not about the trading only, really is the important factor.
Yeah, I mean, it's not every company is ARM, yeah. ARM, the one that's just the listing basically in the US. Yeah, so you have only very few companies that is like that. Yeah, but you can see that as your target, but you have to realize who you are sometimes.
But still, we are competing in a global scale with global names, which are capital rich, and they are in public markets, and yeah, sometimes it is very hard. But I agree that case by case should we look at that as well. Vera, Maire, thank you very much for your time. Thank you for your insights. We are going to be back very soon with next sessions in the Baltic Capital Markets Conference 2025.